Good morning. Welcome to Goofy Investing. Welcome back to my YouTube channel where we talk about investing in the stock market. This is going to be a video about recap on SOFI earnings that happened here on the 30th. The frequency of videos, I usually don't put out as many, but we got a lot. It's earnings season. There's a lot going on, so expect more videos. I'm getting more requests from subscribers and so forth. But let's get into this, okay? They reported earnings. We'll go to Earnings Whisperer, which states that SoFi missed expectations. That's inaccurate. Okay, they're going off. Earnings Whisperer is going off their own internal metrics, but consensus estimates had them doing 0 cents. Earning Whisperer had them doing 2 cents, and then SoFi reported 1 cent. I'm not gonna lie, I had SoFi doing 2 cents, but it is what it is. We'll talk about that later. Big beat on revenue though. Estimate was 563.14 million. Actual revenues reported as 598.62 million. So 6.3% surprise revenue surprise beat, and that displays revenue growth of just over 20% at 20.2%. All right. So now that we've got that out of the way, let's get into the actual earnings itself on the actual results. All right. Members grew. All right. They grew 41%. Now, here's the thing that I'm looking at. All right. I'm looking at the growth ratio trends. All right. They grew 41%. That's good. They're still growing. Slight slowdown in growth, though, from 44% to 41% quarter over quarter. Year over year, the growth is looking pretty good, though. But still, we went from 6.240 to 8.774. From a year perspective on the growth ratio, slight decline, okay? So 44% to 41%, okay? Not really a showstopper if you ask me. Slight decline, but once again, you have to take under consideration the macro and the slowing consumer, all right? Consumers are more conscious to not taking risk, and as far as their consumer habits of what they're buying as well. All right. In actual recessionary turbulence, consumers when it comes to banking, consumers probably feel safer with bigger banks. So that's something to consider. All right, products. All right. 36% growth quarter after quarter now, or year after year, but slowing on the growth once again, slightly, not too much, but they're still growing, which I'm liking. Here's the big one that I saw: increase, and this is what is. If you've been following along, I said I was going to be looking out for this. All right, increase reacceleration of growth in the Galileo accounts. This is the fintech. This is that technology stack that they're working with, that is supposed to be the AWS of the AWS for fintech in this actual industry. So if you've been following along, SoFi is pretty much reignited to be conservative in actual loans, but they're going to focus more energy on Galileo and their Technisys and their the fintech portion of the platform. So fruits of the labor are demonstrated there, and you see reacceleration of growth in there. Slightly so, but hey, it is what it is. They started this transition a quarter ago or whatnot. All right. They've been saying it's a transitionary year, but Q2 is pretty much, or Q1, the end of Q1, the beginning of Q2 is pretty much when they pretty much announced they're going to be focusing more on the actual tech portion of the business model, if you will. All right, so Same trends overall, lending and financial product services, slight decrease in the growth, but they are still growing, okay? Chart is still going up, all right, in the right direction, all right? All right, so that's pretty much that's pretty much the actual overview of the financials or performance. Um, Looking at some other metrics of quarterly adjusted EBITDA, slight decline, but from Q2 2023 to Q2 of 2024, dramatic increase. All right, in adjusted EBITDA. All right. All right, guidance. All right, we'll talk about guidance, but before we do, let's go to the call. I reviewed the call, and this is my summary of what I perceive as what's going on in the call. All right, so little pop shots happening from the CEO Anthony Noto to these actual analysts. Little pop shots here and there. My stock is not getting credit for the performance that we're doing. All right, and that's pretty much the overview of what I've sensed this earning call to be. And I have to agree. All right, there's a lot of YouTubers out there that are probably scratching their heads on why are analysts doing this. Why are they dishonest? Why are they discounting SoFi? Why are they not giving SoFi the credit that it deserves? Well, I'll tell you why. I put out a video, the SoFi conspiracy. You can check it out. But I have a thesis that these analysts that work for these big banks, okay, they work for the competition of SoFi. So SoFi is an actual online bank that's going to disrupt the legacy banks that are more brick and mortar and physical buildings. And SoFi is targeting more the newer generation demographics, that are more app friendly and so forth. So Anthony Noto, and it's no secret, Anthony Noto's compensation package is based on performance based units. So what I mean by that is he needs to, by 2026, according to his package, he needs the stock to be up a certain amount. I believe that's about 24, $25. All right. And then there's tranches of different different levels of compensation the more the stock goes up. All right. So these legacy banks, they know that. The leadership of these legacy banks know that. So I think they're gonna try to attack the stock, and they're gonna try to attack the compensation portion of the leadership of SoFi. All right. So there that is. I mean, that's my thesis on the whole matter. Some people call it you could call it a conspiracy. It's hard for, if you there is evidence of it, though. If you just a pragmatic common sense, if you think about it, if you don't grasp the concept of the common sense of what I'm talking about, hey, probably not the channel for you. You probably need to go look at some dividend investing channel, where past numbers and the quant make more sense. Okay. All right. So that's pretty much what I got from the earnings call. If you've been following along with my channel when it comes to SoFi, I have been projecting employment turbulence in Q3. This is starting to actually play out. All right. So, I mean, let me see here. So, I mean, let me see here. There is, I mean, the amount of jobs have been declining. Definitely much less than expected. Only 114,000 in July. And the market has been freaking out about it. So the market has been selling off. We'll check out our fear and greed index, which is probably the only good product of CNN. Everything else is probably fake news or whatever. But yeah, we're in fear right now. So all these equities are selling off. They're anticipating recessionary fears of a weak consumer due to employment or lack of employment, and this employment turbulence. All right, which is why I've been looking at Upwork way ahead of time. All right, it makes sense, right? So people getting laid off, can't get a job. they may transition or pivot to more of a freelance based ecosystem. All right. And I think this is good for Upwork. I don't think the smart money has caught on just yet. I think the smart money in the Upwork stock has pretty much, stayed in because of the valuation. But I think the other smart money has not they have not migrated the liquidity over to Upwork just yet. All right. I think that'll happen though. All right. That's part of my thesis. Overall, good earnings with SoFi. They did 1 cent. I'm not happy about the 1 cent. I was expecting 2 cents. Now they're going to have to come in the second half even stronger to meet the consensus estimates. Let me see here. Because from a yearly EPS, they're going to have to hit 9 cents for consensus estimates. All right. Let's look at some model that I have. Let me see here. Oh, here it is. Here it is. So SoFi is pretty much, their management is guided in 2026 that they're going to try to do about 60 cents of EPS. If I look at it, I have the stock-based comp, and I have dilution rates here. So year 3 from my actual model, we'll use year 3 of my target model of their dilution rate. If they're going to do 300 and if they're going to do this revenue, and I divide it or I times it by their actual net income margin, which I project to get up to 60%, they're going to have to expand their margin by 25%. All right. And then if I divide that by shares outstanding and what I'm projecting, we're hitting that 68-cent EPS mark around 2026. So I think it is possible. They have to expand their margin though. All right. So we'll see. We'll keep our eyes on that margin for several quarters to come. I got them doing 20% revenue growth in 2024. Consensus estimates got them doing 2.47. SoFi's guidance for 2024 on a revenue portion. Let me see here. Let me see if I can find this. Revenue growth. Okay, here it is. I'm sorry. They got themselves doing 17 to 19%, 2.465 versus my estimate of 2.481. They've been beating, okay? Let's look at some of the quant and past performance. They've been beating 20 million, 30 million. They got a couple more quarters to go. If they keep beating at this rate, 20, 30 million, etc., they will hit the 20% revenue growth mark of what I'm expecting. I'm keeping my eye on it. If they don't hit it, that's fine. I think that there's plenty of years to compensate for it with reacceleration of revenue growth. Consensus estimates with these analysts, which are not really honest, got them growing 14%. And I got a 21% here, and then they have them growing like 9% in 2027 and 14% in 2028. I don't see it. All right. I think SoFi is going to be on track to grow at these rates that I'm projecting on my base case. And they have positioned properly for the unemployment or employment turbulence in Q3 with their conservative measures of lending to the actual consumer that's worthy of these loans, high FICOs, or in actual industries that SoFi deems more safer, and they're going to get their money back for the loans and so forth. And that cushions the bracing the impact for more of a hard landing. That's why I'm getting more bullish on SoFi, while other bulls have been getting more bearish because they're slowing down the growth. I was anticipating this unemployment turbulence in Q3. Okay, so if you're getting value out of this channel, hey, hit the subscribe and like button. Let's go to my position real quick. What do I plan to do? I got a couple thousand shares at $7.75. With the turbulence, right now it's just a hold for me. I think SoFi will be trading in the ranges next couple quarters or so. All right. As part of my thesis that this stock is going to be flat for the remainder of the year. And it's been playing out to be so. I have SoFi as a hold right now because I think I have time to buy the stock. There's other stocks that, that are going down that I think I need to press the position on, as you can see in the portfolio. All right. But my hedges are coming across, better to be more, that my hedges are coming to be profitable at this point and coming into fruition with the actual sell off. All right. So, with that being said, check out my Patreon. $5 a month. You join the Looney Syndicate, be with like minded investors, get access to the hidden gem collection and promotionals and so forth, all for $5 a month. And you get more direct access with me and get to ask me way more questions on more of a personal basis. Okay. With that being said, thank you all for viewing in. Comment down below. Did you think that the earnings was good? Did you not like it? If you want me to take a look at another stock, comment down below. All right. With that being said, thank you all and enjoy the rest of y'all's weekend. Until the next time.